Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. Hopefully, you're on with us. Todd is in a different location today, so it's been a while since he's launched one of these presentations from the office. With that said, we might as well just jump in. There's actually some decent movement today, so you know, versus what we had this morning, we really kind of had not much. We got a little bit now, so let's just start talking about it. That's the best thing to do. Yeah, I cannot believe it's April 19th, one day past tax day for those, I guess, two special states. It is their tax day. I think it was like Maine and I want to say Minnesota. I could be wrong with that one. So, but it's definitely, again, that's it. Taxes. If your extension's not in, shame on you. I heard some of the numbers yesterday about the amount of money that the government, the IRS, was taking in as far as taxes go, trading profits, and then also this year, cryptocurrency, the amount of money that they brought in from it. Yeah, kind of crazy, staggering some of the money that they were actually expected to get. April 19th is also my son's birthday, so for Asher and Reese, the two kids in the picture, these two guys, they're 12 now. Obviously, this is a couple of years old, but yeah. So happy birthday to Asher and Reese today. For those of you who don't know me, again, I'm the president and CEO of Keep Trading Simple. I'm not an Nadex employee. I'm not employed by them. I've been partnered with them for a few years now, doing different type of education pieces for them. Been a member of a number of their education summits. I've written some articles for them on a weekly basis. I've done obviously these analysis sessions, and then Todd and I have the morning show, which is something we added in the last year, which has been awesome. I started trading back in 2000, so I am kind of a what I would call a Y2K trader. A lot of people are like, wait, what do you mean? What's Y2K? For those of you, if you don't know what Y2K is, yeah, that means you're probably pretty young. So, yeah, back in the day when we thought the whole world was going to end because computers only had 2 digits, not 4. So, 1999 would have rolled us back to 1900, right? Learned pretty much everything. Stocks, options is what I started off in. Found Forex, got into futures, spent some time traveling around the U.S., teaching people how to trade the markets. I can say that I officially worked on Wall Street, not on the New York Stock Exchange, but the actual Wall Street and financial district. I worked on it, saw the bull every day, walked past the New York Stock Exchange. It was a great experience working for one of the big 3 banks in their advisory divisions. Learned a lot what I didn't necessarily like about kind of the markets in general, that with Wall Street. A lot of misconceptions about what I kind of thought was true, what versus what actually turned out to be true. Anyway, it was eye-opening. I realized that my true passion was really kind of out on the outside and really helping people, trade the markets themselves. So did that for a couple years, and then yeah, now basically since COVID, I just stayed home. I teach people how to trade, do a lot of presentations, mentor students, and again, obviously take care of the little ones. The girl, actually, it's funny. The girl's hair is as long as mom's is there, and she also says, "Daddy, I need a new picture." So, guess we got to get out and get some new pictures. With that said, if you guys have never attended one of my sessions before, you guys know that, again, you guys can ask whatever questions you guys like. I don't make any trade recommendations or anything. I'll cover the disclaimer slide after this. I have a little bit different kind of form of analysis. Not different, but like not the traditional, I'm going to throw 27 indicators up on the screen so you can't see anything. I'm a price action trader, so for me, being able to see the candles is really the most important thing that I can have. Not everybody believes in that. Some people like a million indicators. We're like, wait, what am I looking at? I just, those people kind of crack me up because it's like, you can't even see your chart. How can you trade off of it? So you'll see a lot of horizontal lines, areas of interest, some price labels and things. If you have questions, don't hesitate to ask. At the end of today's presentation, I will give you my email address. You're more than welcome to email me. This is a busy week, obviously, with the boys' birthday. They were on spring break last week, so I'm still trying to play catch up. So if you do message me, give me a little bit of time to be able to get back to you. All right. With that said, let's cover that disclaimer. Right. And this is pretty standard that all trading on Nadex involves risk. It may not be appropriate for all. Members risk losing the cost at the end of the transaction, including fees. You should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material presented here in Speak and Shoot is a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Now, Nadex is subject to U.S. regulatory oversight by the CFTC and Nadex is a registered trademark of crypto.com. Still don't have any major updates with that yet, as far as new things. I'm waiting for all of that to drop. Again, obviously, whenever you add new things on an exchange, they have to go through the regulatory processes. If you guys have ever dealt with government, takes a while for anything to come through. So I can't wait till we do have some of the new product releases, as well as some of the new things that should be coming down the pipe. I don't know when they're going to be here, but every week I'm like, oh, come this week, come this week. So they're, obviously they're on the way. They're working on it as fast as they can. So as soon as they're there, it'll be a lot of fun. With that said, let's cover the agenda for today. So first things first, I should have just deleted this, right? Upcoming news events. Yeah, there's not a lot of them this week. It's one of those weeks that is just so anemic. It's like almost not even worth talking about. Yeah, there's just not a lot going on. Unfortunately, I wish I could say that, hey, listen, this is an action-packed week. As always, we love to have those action-packed weeks, but we don't always get them. Some weeks are busier than others. This is obviously not one of those weeks, so it's okay. It kind of gets back into like kind of almost like a little bit of a market reset, going back to like pure technicals and really, again, it is a big earnings week, so it kind of bring some attention back onto that market, back on the U.S. market. And then again, obviously, the yen is about the only thing in play right now on a global basis, which, for all things being equal, I mean, if you think about it right now, with what we have going on in the world right now, recovering from a pandemic, one of the largest nation in the world locking down, one of the larger militaries in the world right now invading another country, currencies is quite flat. And then, again, that happens sometimes, right? We're waiting for that next big interest rate decision. We've had some major ones. We do have some kind of comments later on this week, and we'll see when that next big drop is coming. But we know that we're going to get at least a 0.25. If not, we should be getting a 0.5 raise rather soon. And the question is, what is it going to do to the overall markets? Speaking of markets, after we look at the I would say lack of news events, yeah, we're going to cover the indices. Indices have been on fire this morning. And by fire, I mean they're literally going straight up like a hot air balloon. Why? Well, pretty simply, I mean, the VIX has been crashing down, showing that there's really no volatility. There's no fear, right? The fear index is down, right? When the fear index is down and there's no events to really drive it right now, there's no fuel in that fire. This is exactly what the market should be doing, is going higher. Now, will that get messed up by earnings? Maybe, maybe not. But again, if you look at the battle between earnings and what's coming in the future, it's really what's coming in the future that matters the most. Then we'll cover Forex. And like I said, the yen right now, the yen is, while the U.S. indices are going up, the yen is going the exact opposite way. And, the BOJ has been screaming for the last week straight, the yen is weak, the yen is weak, the yen is weak. And it's funny, if you look at the headline on Forex Factory, it's Karaba looking at his watch, be like, hey, guys, I've told you that the yen is weak 5 days in a row now. Why are you not shorting the yen yet? Short the yen, short the yen. It finally moved today. With that said, it is at a very interesting spot. I'll show it to you in the chart, but we are now officially within within 2 days of dinging that 130 number. Okay. Based off our daily ATR, which is 108 right now, we are in close proximity to an area where they said it will now start hurting the economy, and all we have to do is raise interest rates. So we're so close to that trigger. And again, this is not something that the market has to, quote, prepare for, right? Because it's not a guess. They said, if we get here, we're going to do it. They have to make it stronger. They're telling you that ahead of time, right? Could be a great trading opportunity. And then commodities. Commodities were, going a little bit, they were slowing down a bit today. And then gold and silver decided to go crazy as well. And it could be the IMF data that we had earlier today. IMF talked about how there's basically global slowing. After it seems like the recovery period is in, and now things are going to start getting really, really slow. Global recession kind of sounded like it, right? Kind of sounded like it. With inflation high and with, global recession, it's a very interesting scenario. It's one we don't see normally, right? So it's one that we have to go quite far back with, again, I'd question, hey, listen, to find an environment like this, we got to go so far back. Does that really even pertain in this this economy? Answer is probably not. So we'll see. All right. So with that, let's go over and let's go look at the news. Okay. Obviously, again, we always kind of start off, it's right at the top currency wise. 190, 243. Yeah, those look like kind of outliers right now, right? As they should be, right? 14, 3, 41, 13, 8, 12. Those are well under. Well under, right? Um, oh, here you go. There is a headline. And I've been talking about this for 2 weeks and talked about how there's no way I could short natural gas. The IMF just said 1 hour ago a Russia gas ban would have a serious impact on the EU. Again, to me, I don't think Russia goes to nuclear weapons. I think that this is their nuclear weapon right here. They literally just you're not going to pay in rubles. They shut the gas off. And again, now the IMF is saying, hey, listen, if we ban, because remember, the EU can say, listen, we're going to ban Russian gas. We're just not going to use it. But the reality is the people need it. I think Russia gets to within a month from the EU decides to cut it off, and they say, you know what? We're cutting it off, guys. They're going to milk it for everything they can while they can, and then cut it off to be able to stick one to the EU, is what my opinion is. So we'll see. It's a very interesting kind of headline there. And again, war dims global economic outlook as inflation accelerates. Again, bad global outlook, inflation accelerating, not good combination from the IMF. And that's kind of why we're seeing things. A bullard in a China shop. There we go. I love when we get good headlines like that. But besides that, I mean, as far as headlines go, we don't have a whole lot. Normally we have a little bit more, right? There's not a lot in here, right? Not a lot in here to be able to kind of go through. But the IMF data is important and kind of on a more global spectrum. News today, the only thing that we have of medium importance is one speech. 12:30, about to kick in. Maybe move the Swiss around a little bit, but probably not too much, right? Probably not too much. Tomorrow, again, not a whole lot, right? I'm going to click yellow so we can kind of see it. Nothing in the morning. We have CAD CPI, and again, that's an important number. Seeing it slow down a little bit is fine, but the common, the medium, the trimmed, again, you got to go kind of understand these a little bit. You can click on them. Their core, again, remember, according to our core, oh, look, the core is going down. Look, the core is great. And then we saw the PPI numbers, and they skyrocketed. They were double what they talked about before, or what they had mentioned before. We'll see what this one comes out as. But again, another reason why, again, CAD could be a good place to be looking for some trading opportunity tomorrow morning on Wednesday. Besides that, there's not a whole lot. We have oil inventories. Last time we had a monstrous oil inventory of 9.4, right? 9.4 million barrels of surplus. And yet, magical oil did not drop down to 85. So today, at this afternoon, 4:30, we have our API oil inventory report, the industry reported totals. That could be a good mover, kind of a telltale sign on what we're going to see. And then, again, tomorrow morning at 10:30, we get our actual EIA numbers. And again, this is the one that actually matters. This is the real one that if you mess this one up, there's actually penalties for it. We had a massive surplus last week. Massive. So we'll see what this gives us this week. And then we have CPI for New Zealand. We don't trade New Zealand at Nadex, but for external traders, New Zealand has already done a big raise. They've done a big raise. Their CPI on a quarterly basis, quarter over quarter, even with their raise, 2%. So again, these raises look like they're getting big. Right now, the carry trade is kind of right now in the New Zealand yen. It's kind of the biggest bang for your buck right now, but it doesn't mean that it's the best place to put money, right? But again, higher than it was previous quarter, and you're raising means you need to do more. And again, that could be a foreshadow of what we are seeing kind of moving into the future, right? So, all right, there we go. Then we go into Thursday. So Thursday, again, I'll take out the yellow because, again, the yellows are not really big. Kind of low, right? We have the Philly Fed Manufacturing Index. It took kind of a big hit last time. Should be decent. And then unemployment claims, and that's it really for the U.S. Powell is speaking at 1 p.m. in the afternoon. And Powell speaking, again, this is a debate on the global economy. It's not so much what's going to happen with the dollar. It's kind of global politics at that point. Again, it should be in line with what the IMF says, but, it could provide some, potential market movement. At spring meetings of the International Monetary Fund and the World Bank. So it's not necessarily what are we doing with the dollar? What are we doing to curb inflation here? It's kind of, again, it's quite broad. So it may not have its normal kind of power like we normally see, as well as, again, Bailey speaking at the same event, right? And that's it. There's nothing else on Thursday either. So 2 speeches about the global economy. I don't know if unemployment claims will be able to move us that much. So we'll see what Thursday look like, And then Friday is actually a day that has some decent news events. It's really the one day this week that we do have something decent. Again, retail sales start off, right off the bottom, was negative last time, expected being negative again. And again, the big question is, and the statement with that one is retail sales down because of lack of supply or because of high inflation? Okay, last time when we saw this was because of high inflationary pressure, right? Prices were so high, people were like, yeah, I'm not buying that, right? Versus, well, I'm not buying that because I can't find it, you know? I mentioned in the morning show, we tried to get the boys birthday cakes from Sam's Club, and they couldn't do it. They're not taking any orders for birthday cakes or cupcakes. I tried to get cupcakes today. And like, nope, we're not doing any orders for cupcakes either. They can't get the ingredients to make them. I'm like, wait a second. Somebody as big as Sam's Club, right? I believe Sam's is owned by Walmart. They are unable to get the correct ingredients to be able to make. I think it's the frosting, is what they said. They can't get them, right? A big superstore like that with all the power they got, they can't get them. It's like, wow, we are seeing supply chain shortages, huh? So that'll be interesting to set us off on the European session. And then we crank into the manufacturing services PMI. Germany, obviously, being the most important. And typically, when we start talking about Russian gas and energy, it's Germany that we're talking about. Okay. So it'll be interesting to see what the manufacturing and services PMI is for those two areas. It looks like they're calling for an adjustment of manufacturing. Again, that's kind of going in the future. Services is kind of like where we're at. Could be interesting. And then again, CAD core retail sales. Again, positive, lower than expected from before, and then a month-over-month basis are showing down. So they're showing that CAD's having some problems, but we'll see what the inflation rate looks like. And then again, we have the U.S. manufacturing and services, again, both well above 50. We're not at any major risk to go below 50. And then obviously Bailey speaking at inflation dynamics in a fragile global economy. IMF speech, but I think, again, the UK has raised 3 times already, and they're still seeing inflation. So could it provide some fireworks for maybe the pound or maybe even the dollar or maybe even gold? Gold's probably the one that has the most ability to move around that day. I feel like that's probably where we're going to see something on that one. When he talks about global inflation, now we have to crush inflation and things like that, and the need to to halt inflation, particularly in energies and food. I mean, energy and food is one of those things that it's easy to say that the energies, the gas is a luxury, not a necessity. But for so many people, it is a necessity, right? To be able to get to work, things like that. And obviously food is obviously a big one too. So I hate when they like, oh, well, the core look great. Well, who cares about the core? The core is not what's driving the economy, right? Food and gas is what drives the economy. So we'll see. I don't know what a speech looks like, but I think that could definitely provide some opportunity for gold, particularly in a short direction. This morning's comments from the IMF talking about, the world's expecting this, and we went up, but both of them were much worse than before, and it's going to get tougher, and this and that, and again, IMF, you can say, are they truly non-political? No, because as soon as you start talking about unprovoked, it depends. That's a political standpoint. That's an opinion, right? We'll see. But look, medium-term outlook revised downwards for all groups except commodity exporters who will benefit from the surge in energy and food prices. Yeah, do you know who a major exporter of food is and energy? Yeah, this guy right here. Begins with an R, ends with Russia, right? Actually, Russia and Ukraine are both. Things like, was it sunflower seed oil, right? Like something like 70% or 80% of the sunflower seed oils is in the world, it comes from that region. So yeah, there's a big carryover, unfortunately. There we go. All right. Grivers into the economy do very well. Oh, here we go. Not that Evans is a big driver, but anytime you see something from one of the Fed presidents, we need to be mindful of the wage price spiral, need to monitor it, right? Good reason to think the economy will do very well even as rates rise. Yeah, okay. Still too early to think inflation challenges are changing, but they could be. Okay, if we do a couple of these 50-point increases, we could get to 2. There we go. Look at that. So talking about basically going from nothing to 2.25 by the end of the year, right? So Evans is now jumping into the, if we do a couple of the 50-point, and I would ask him, Evans, why didn't you vote for a 50 the first time? Because that's where it was really justified the most. and then just wait and see what he says. But nothing, nothing. So we'll see. So again, it looks like more people are again agreeing that 0.5 is really what needs to happen. So all right, so we'll see. Again, that's a nice one out of Evans. Within the dollar. Oh, here's another one. A top U.S. Treasury official lays out 4 reasons why the dollar remained the global reserve currency. I don't think he has any clue what he's talking about. It would be my opinion on that one. Unfortunately, although I agree with the sanctions and things that were done, I think using the dollar was the wrong thing, and it's nice that he believes that, but he came from the administration that did it. So unfortunately, I disagree with him. It can no longer stay the reserve currency, and good thing we know how to trade currencies, right? All right, so let's go over and let's dive into charts. And again, we're going to start off with the VIX first. Okay, VIX is kind of a telltale kind of story, right? VIX itself is not necessarily it's not necessarily like a commodity. People are not picking up. It's a fear gauge, right? It's a volatility index. It's basically looking at the fear and the volatility on S&P 500 options. Okay, it's not on the S&P 500 itself. It's on the options market. I got a question last week asking about that. Like, why do they do it like that? The options market is quite large. There are big players in the options market. Like a lot of people think that Warren Buffett made all his money off stocks. It was actually the options market he made all his money on stocks, holding and dynamically hedging his positions. So it's a very large and it controls a lot, and it's a lot of back end. Like beginners don't really trade options. It's something that's more done on an institutional basis where you're like, oh, they bought 1 million call contracts. Like who the heck does that, right? Like when Warren Buffett, jumped in to save Bank of America, right? He used warrants, not even stock. He used warrants to have the right to buy things. We basically use the same principles of options. So it's a good gauge. A lot of times it will foreshadow, and again, because it's using the options in the futures market to do that, it gives us a little bit of data before the market opens, right? Because the S&P 500, if you're doing it from the open, it's different than what the pre-market volatility is. Today, it's been nothing but straight down because of that lack of volatility. And we talked about it yesterday. It got eaten up today. Kind of did the same thing. I mean, really, what was the major headlines this morning that really would have thrown fear into the economy? Really not much, right? With lack of that volatility, it tends to revert back down again because again, 22 is pretty high, and we're at this 21 mark now. And because of this, the volatility disappearing, the fear out, the markets have every reason to go higher because it's a fear gauge, right? And that's what they're all doing. ES, monstrous move. And again, we talked earlier today about that 4,400. Was it an area to go short from? No, because it had punched in this area so many times. It was well beyond the 4. And you can see from the 930 candle, let me drop down to a 15-minute chart. You can see from the 930 candle, this is what we did. It just basically went straight up. And now, again, we got in that 1030 time frame. We're starting to kind of get a little bit of exhausted. It's a retracement all the way back to the original kind of move here, and you can see we're kind of hitting it. Does this mean it's a sell right now? I would say not really. I mean, there's no besides Evans' comment, and he's not considered a major market mover, there's still nothing out there right now that really says, hey, listen, it's time to short. There's nothing necessarily bad going on. Now, there will be some profit taking coming in, and we kind of probably saw those things. But for the most part, it started to hiccup around 10:30. There's nothing in here really driving this, right? There was the 9 o'clock pullback, right? 9:15 at base, and then 9:30 it took off. It came back and grabbed this low base here. And funny enough, this clock was at 5:30. There's your basing in the European session. There's your 9 o'clock where it reset and closed at 9:15, right? It came all the way down here, and that was the takeoff point. That was the bottom for the day. Okay. Again, nothing really going on. No reason why it can't go higher today. You're not hearing people scream about interest rates and Russia using nuclear weapons and everything else. Again, with lack of any other resources or lack of any catalyst, the markets tend to move higher, right? The markets tend to move higher. So again, risk on environment. Big question is now, we've obviously been up here before. It kind of pushed this zone to the brink, so it's not really the best area to short off of. Are we going to push up in this higher range up at 44.58? Is this the turning point? I'd say that that's probably the next area that we're looking for would be an extension of this across. Where is it? 44.57.50, so 44.58-ish range. That'd be the next area where I'd be like, hey, listen, look, according to what's on the left, right, there's a major push there, right, with a couple other small levels above. So while the market's moving higher, I would say I'd be looking for a top in here. I think at this point it's a little bit late to get in long. That would be the early morning trade. At this point at 12:30 in the afternoon, the market's going to reset. We'll see if we have a little bit of a pullback, but I'd be saying, hey, listen, let's look for a decent topping opportunity here. Let's look for some good candles. Tomorrow with inventory, with everything else going on, again, 2 days with no headlines, we are probably more in this right now for somewhat of a reversal. So, the opportunity is there, but today, I mean, obviously, again, no VIX, no nothing. VIX is, great. Down 6%, huge move in the VIX. Absolutely, without a doubt, it should be up. But again, at 12:30, it's a little bit long to get into this. I'd be looking for some type of a topping pattern, profit taking coming in, and a little bit of a pullback. We got plenty of room. Okay, and Q. And Q did the same thing. We had a base that was formed at 5:15 this morning. You can see touched it at 9 o'clock. We talked about that in our early session. And again, 50% got sliced through like butter. There's 1, there's 2, there's 3, there's 4. There's nobody left here. And again, boom, acceleration just absolutely exploded through 1400. And we're also coming up to an area. And if we look to the left, this was an old trade short from last week. You can see the last time we had any selling come on was right around kind of the area behind tends to be where we look for profit targets. That's what we just bounced off of. Is this the top? Probably not, but there is a whole area here of selling. So there's the reality is this entire area is kind of packed with sellers. So we are at an area now where we've driven up so far. Is this where we start to turn and roll? Yeah. I mean, there's a couple different scenarios out there. Again, everybody starts talking about 0.5, talking about putting it into a minor recession. Any of those things are all somewhat negative. It just kind of basically retraces what we had today. And again, is today a normal base move? I mean, if we look at the, looking back for, till what, the 14th, 5 days ago, very, very strong move, one direction, 0 pullbacks. Again, it almost qualifies for a parabolic retracement, looking for it to turn and roll back down again. Now, when the top is in, it's the same thing as the ES. I'd be looking for profit taking. Probably, typically, I like to use the candle behind it. It's kind of off, but I would say that this is probably the target back to the downside. When we do have that confirmation kind of roll at the top, and again, I think we're close, right? I think we're close, but I think we look down here for 13,898 is kind of where we go. And again, it could be more talk of the 0.5, going into a minor recession. None of the IMF data was great. Talking about the need and the damages of having inflation as high as it is. I think all these could be really great catalysts for some type of a short. But again, we do need to find a decent top. I like the candle formation. I don't like that the candle formation happened at 11:45 right before lunch, but that's a decent formation. And again, it is a 7-8-6. There will be some fib traders jumping in on that one as well. So a couple different things in there that there is the play. YM, same idea. And again, YM is also bouncing off of a level. I just moved it across. It's been there before. It hit it in a spike and dropped down again. Kind of chop back and forth. Do I love this one for a short now? Not necessarily. At 12:30, it's not the time right now. But is my focus on this one? Excuse me. Yeah, oh, what I really should say. I must be drinking decaf coffee. I hate when my wife sneaks decaf in there. You drink enough coffee and you can tell, you're like, you know what? This is not the placebo effect is not on my side today. No, actually, it's probably more the I have much more of a voice this week than I did last week. It is because of the allergy meds, but man, those allergy meds definitely take its toll as well. I would say my perception of this one is we are probably getting back up into bearish territory. Look for profit taking. Look for decent tops on this. It is bouncing off a level right now, but obviously we're extremely low volume right now. We're inside of that 12:30 time frame. We see any highlight that it's going to start pulling back again. Again, this is very much the parabolic move. I think 34,500 is a major target for this one. If this is where we're going to top, again, I'd be looking for profit taking. I look for a run back down at 34,500. I like that level. It's hit that level a ton of different times. Hugely psychological. And again, makes complete sense why I would pull back. Not on a fundamental basis here, but as far as the psychologicalness of 34,500. Again, you can see it's hit a bunch. Russell. So Russell pretty much off to the race. I mean, 2.29% today, 2.3% already up. Huge day, monstrous day. Again, Europeans set it off. We had a pullback right before the actual open today. This is one of those ones. I had some zones in here drawn, right? And ended up coming down and kind of breaking the bottom side of it for an entry at 9. 9:15 held, and then 9:30 is really where it just ended up going wild. And again, lack of any true talk of raising interest rates or anything bad, Russell should move the most, okay? Russell tends to be the fastest. Top and bottom, right? But same thing. we are running into an area here. I'll go to a 30 minutes so it's a little easier to see. The last time the price is up in here, and again, I'll draw a horizontal line on it, we're in that same range, right? Base right here, nice push. Try to make an attempt, didn't do it. Touched it, hammered down. Starting a base right here after this type of a move straight up. So I would say the same thing. My kind of mindset on the Russell right now would actually be looking for a collapse back down again. I think if a lot more people are talking about the 0.25, I'm sorry, the 0.5 versus the 0.25 race, or even maybe even more, right? Maybe even more. Like, I feel like this one has the ability to go down. Finding the right product obviously matters. Using something like a call spread, I think would be decent on there. It's moved up a ton, but I think a call spread would be a decent area to be able to kind of look for some type of a top. Again, if you got to be a little bit out of the money, it's not necessarily bad. Unfortunately, there's no major blockbuster, and there's no like non-farm payroll this week or anything, so we don't have that huge kind of like A-bomb or whatever, right? Quality news event to really shoot us back down. But this is a lot of movement, extremely fast, heading straight up in the air. There was a lot of fear this morning with the IMF talking about things and banning natural gas and all this other stuff. I mean, a lot of negativity out there, right? But because the VIX is starting to drive back down again, there's no true volatility or threat to the United States right now. Again, absolutely justified to go higher today. But as with the other three indices, I'd be looking for this to turn and roll. Okay. All right. Now looking at currencies. Now currencies, there's a little bit of action in here right now. I mean, looking at this, you can see that the Aussie dollar, it's up 0.3%, right? Euro pound, 0.15. Pound dollar, 0.01%, right? Dollar CAD, 0.15. A little bit of movement. The only things that are moving, 1.7, 1.5, 1.3, and 1.4 are any of the yen-based pairs. Here's the Aussie. So yesterday we were talking about, again, this dotted line was going to be on news. We were looking for a pullback before news. We were hoping we were at the 73.39. We got the pullback. It just wasn't all the way down. And then when the news came out, boom, we took off. So again, we're talking about Aussie strength coming in from news. And again, if I move this, that's where the news went, and it ended up going past my target, but it went straight up. Okay. Since that time, it's been a bit more tempered and really kind of has come back in a range. You can see that we have lower highs here. We have higher lows. I would say right now in this one, I'd be looking for opportunities to short. Although the data wasn't bad, I think there's some important levels to talk about. Easy base to see right here. It's been confirmed, so I think if you are looking for additional levels, I think this 73.96 is a decent level. Is it my favorite one in the world? No, but I think it's a pretty decent one. It is above a 23.6, right? If I go top to bottom, you can see it is a little bit higher. There is one at the 23.6, but it didn't hold the first time, and this is where we held the second time with this level of basing. So I'd say that that's probably the first level that I'd be looking at. Second one, obviously around the 50, right? A little bit of basing, it touched it, it came up, it confirmed it. That would be kind of a secondary level as well. I think both of these are great shorting opportunities. As much as I would love to say that, hey, listen, with everything, with gold having the potential and everything, this is a great long. Not so much, right? There's a lot factored in the dollar, but I think more dollar strength is coming. I don't know. 2.25 is a big jump in 1 year. I don't know that the market has fully factored that in. Probably not. I'm thinking that probably 2 is probably what's factored in, not 2.25 or 2.5. I'd say there's probably a short opportunity just because of that. We need more people than Evans talking about it. Obviously, Blard is on board. We kind of need 1 or 2 of the other voting members to really kind of start making a comment about that. And like I said, it only takes like one. It doesn't. As soon as we have a couple people talking about it, the market will start adjusting for it in preparation for the raise. Again, that's going to bring dollar strength back. And yeah, I mean, right now, unfortunately, we're sitting right in the middle. There's no trading opportunity, but I think 74.96 is decent. And then same thing before it on the downside. Look for 73.39. I think is a decent spot down below. Now, Aussie yen is just flying, right? Aussie yen is flying. Again, this is really not even the Aussie. It's just, I should just say the yen. The yen is just getting hammered. I don't even know if there was a pullback. Yeah, it ended up breaking through. So You can see even the 23.6 didn't work. It came back and grabbed the same buyers that were here to push higher. Right now, I wouldn't do anything with this. I would say that it is definitely getting close to an area where we'd be looking to short. We had the dotted line. We were looking for this to go long, and it had already started the move. So from news, it actually was able to punch much, much higher up and then kind of pull back and then continue to push. I think the way to look at the Aussie, and again, it's been a while since we've been up here. I mean, going back, I don't even know, can we see it? Yeah, we can. You can see where we're at right now. Would have been nicer if this is a little higher. Probably there. That's where we got a decent test. Yeah, we'll do it from that level. About like we asked if we could see it. Now it's like, yep, we can see it. There we go. All right. So on a technical basis, we know we really don't have a whole lot from there till there. We know we were in kind of a racetrack. So let's remove this. Not really. That's actually decent if I pull back to there, but I don't need it right now. Right now, looks like we got another 80 pips to go, right? Well within 1 day's worth of movement. I think a potential area for reversal in this one is probably set up here at 95.77. Reason why is this is a lot of yen movement. We also know that when the yen hits 130, the bank says that that's where it becomes painful to our economy, and that's where we would have to start curbing inflation, or in their case, deflation. Um, Again, raising the interest rate would absolutely help turn this and flip this down. So it's getting close. Again, this is a little bit off. It's the dollar yen that they care about, not the Aussie yen. So it's close, but I know we have a little bit to rally up. This is probably on the same page, about 90 more pips. So, I mean, I guess if you're looking for something, trying to figure out how to get in, yeah, it looks like the 23 went through. Hesitant to draw a zone down here. You could use this one if you really needed to. Let me see something here. Let's do non-Aussie here. Flash manufacturing tomorrow. Leading indexes in deposit level. This is supposed to be horrible news, right? This is supposed to be horrible. So if we get a good push with this tonight, not that MI leading index is a big one. This is really kind of 26 is more where we're looking for. Yeah, I'd say one more push higher. I think 95.77 is probably decent. And again, a lot of this is just the yen is getting close to that trigger point where the bank is going to probably intervene to start raising interest rates over there. It's just, again, probably safer in the dollar yen, but you have the ability to do it over here in the Aussie yen. Euro pound. Pretty flat in 24 hours. The euro pound right now has a total of 18 pips. Again, we talked about it 50%, and this was forecasting. This is not actually the true 50, but we do know that it is a level. It's been there before in the past, and had a decent rally off of it. We hit that this morning and pushed lower. The news this morning made it rally a little bit, but not really necessarily enough. You can see how flat it was, and again, 18 pips in 24 hours. We're talking about 1.2 an hour. Is there a lot of profit potential in that one? Not really, but I will say this. If you guys know some of the more advanced strategies, one of the cool things about options is, like, unlike just buying regular stock, right? The only way to make money in buying regular stock is for price to go up, right? Yeah, you can short stock as well. Again, extremely risky to do it. In which case, when you're shorting it, you're actually borrowing it from somebody else, selling it, and then you have to buy it back to pay it back to that person later. But with options, one of the cool things is you could actually buy in options and profit when things go down. That's why there's puts and calls. They play them in both directions. Some of the same strategies that you use in the traditional options market, you can use over in Nadex as well. This is one of those pairs right now that gives you the ability to do that. And again, if you know some of the sideways kind of strategies, right, the neutral strategies, Dan Cook has done some education webinars in the past. I've taught it years ago as well. Go find one of those strategies. With this zone being where it is, this is a pretty strong, strong kind of peak down. It's hit it again. You can see that it really hasn't moved much in 2 days. This is kind of one of those scenarios where you use those kind of neutral strategies. particularly butting up against a level that's not only at 50%, which will probably lead, again, downward movement, but it's also a very strong sell area. Again, there's the actual candle itself. This is kind of one of those decent opportunities. If you're looking for something, again, I don't know that we're going to get enough movement in a couple days, maybe with the binary, but it depends on what the volatility is going to be, stacked in here. I would say this could be one of those sideways based trades where at the end of the day, you're taking on different positions, two positions. You're ending up with like more or less a one-to-one risk to reward ratio. But I think this one has some potential for some more sideways movement. Euro yen, obviously the same as the Aussie yen, continue to go higher. We talked about a level. Again, the level had been originally established, pushed deep and hit again. And once it started the base, it just took off. Again, all the yen data finally kicked in all at one time. You can see that this one is like, it's teasing that 23. And then here it didn't hit. And then up top, it didn't hit. So the 23 is not necessarily holding. I'd say kind of the same thing. Let's see where there's a 4-hour level. We should be finding something pretty decent. Question is, how far back do we need to go on it? Yeah, there you go. You can see we're flirting with all this right here. Looks like we got a zone right about there, right approximately that area. Okay, approximately that area. So also 89 pips. So about the same bit of movement, right? 80 pips up in the Aussie yen, 80 pips up in the Euro yen. We're at that same area where we have higher time frame sellers coming in. So kind of the same trade setup for the most part. Of these two, I actually kind of like the Euro yen short better. And here's why. Europe obviously is getting some, it's not that Europe is getting strength right now, because obviously the war, there's no world peace or anything right now. Things have escalated in the Donbas region. I think the next shoe to drop is probably something negative for the euro, like the IMF saying, hey, listen, a ban on gas would be detrimental for the EU. I think the yen is about to step back in and get a little strength coming in. With this rallying up as much as it can, if we can get a small kind of reversal point, a decent level candle, we don't have it right now, but if we can find a decent candle top in here, I would say that the euro yen, for maybe a little bit more of a swing trade, I would say something more to the downside on this one. Just because, again, it's great that everything, taking the war to the next level isn't necessarily positive. I think they'll turn gas off eventually, and natural gas off eventually, which again is a negative euro kind of fundamental. And then again, the yen saying, hey, listen, it's getting too weak. We need to raise interest rates. We need to get some inflation. Remember, Japan's inflation is only 0.5, so they can raise and they're good to go. They can, they can jack the inflation a little bit more. They're trying to get as much out of it as possible, but their economy is not a very big inflationary based economy. It's more important for them to be able to export, keep it cheap. So, but too cheap is also a problem. So I think yen stress coming back. I think there's a great reversal opportunity in this one. Unfortunately, I don't really have the level, but when we get it, as I said, 80 pips up in the other, 80 pips up in this one, you're at an area right here at 140 or 139.89 that we've had sellers step in both times. Euro dollar, pretty boring. 22 pips in 22 hours, so less than one. And you can see we had an area, we had an area of buyers at 107.53. We missed it, right? You can see that I missed it by just a very, very tiny bit. Missed it by less than 7 pips. And since that time, we've literally just been basing right around that 26.3. We weren't able to make it up to this level. And again, this was kind of a front run on the 50% fib target, fib entry, and that's 108.27. 108.28 is fine. I think it's still valid, but it's really just channeling sideways. As I said, euro yen, I do think we're going to have some euro weakness coming in with the data this week, particularly the manufacturing and the services PMI data. I do think Russia will turn the knob off. All these are negative pieces. Again, escalation in Ukraine also bad for Europe. Again, I believe more in dollar strength at this point than euro strength. Although I do think that they will start rising with the euro in the summertime. So if we get up there, I'd say it's probably a decent short target. Again, it's floating right down the middle. Not a lot of trading opportunity when you're doing this little sideways strategy, right? Pound yen. Okay. It's funny. Pound yen. Could you have gotten in this one on the 23.6? Maybe. It would have been very questionable. Obviously, when it came to here, kind of went through a little bit, right? But all it's doing is pulling back and it's continuing to rally. It's the same story that we already talked about, also yen, euro yen. Let's see on the pound yen what's above. Might as well set that target. We did it for all the other ones. There we we go. Let's see. Yeah, this one's got some clearance. There's your next level of basing with a touch. It did push it pretty deep, but that's the next kind of major level with sellers coming in, maybe even a little bit above. This is 240 pips, but again, this one does move more than the other one. Let's see, what is the daily ATR on this right now? Daily ATR is 160. So day and a half, right? Not even 2 days. It's a day and a half away. Okay. So kind of in that same wheelhouse. It's pretty close. So again, it's more than 80 pips, but this one does move 160 where the other ones are moving a whole lot less. Yeah, also yen is 108, and that's actually probably inflated right now. 135 euro yen is probably inflated a little bit now. So yeah, so kind of in the same wheelhouse, but it needs to move a little bit more. And again, I do think bull strength, I'm sorry, pound strength is kind of the name of the game. But I would look for this to come up. Is there going to be short opportunities in here? Probably. Unfortunately, there's just no major headlines really for the UK this week that are really going to kind of help on this one. So I would say still remain bullish. Again, I've been a bull for for the pound for a while. I think we continue that moving forward. Pound dollar. We did talk about 129.88. We talked about it in a few days, and again, we kind of touched it twice and rallied up. Kind of just barely missed the 23.6. And actually, that would have been, whoops. Let's see, let's adjust that down. Yeah, it was actually closer. It kind of went through. The 23.6 was based off the levels here. So right now, this is what we're looking at. Nice little front run on that. I would say right now, I mean, for me, this one I think we're clear until 130.44. I like the 130.44 as a short area. It's been there before. It's been front run. So again, we know we definitely have an area of sellers in there. So those would be the ones to watch out for. If you're not already long, again, you're running into some sellers right now. I'd be very cautious with going long this position. And again, I do believe in pound strength, but right now with everything going on, we start talking about global economies and everything else. Yeah, the pound is strong, but the dollar is going to be the strongest, or should technically be the strongest, until they start talking about the global reserve currency, um, which again, it's not even like the reserve currency. It's basically like oil is priced in petrodollars. Right now, we know that all oil is not actually priced in petrodollars. There are numerous countries now that are paying with Chinese currency instead of U.S. currency. So, yeah, that's kind of the big thing there. So I'd look for, like I said, I like this one long, 130.44. We can look for a potential short. If you're going to associate this one with a UK session or even a dollar session, just because there's lack of news, there's a lack of catalyst this week, those are kind of your best options out there. Is why I hate trading in low news weeks. It's very slow, right? It's very drawn out. And again, this is doing kind of the same. So yeah, dollar CAD. So dollar CAD, we talked about yesterday, a drop of 125.76. We're looking for it to push a little bit lower. We got about halfway and it started kind of chipping right through. It made it down to 125.67. Decent move, and then all of a sudden, bam, 4:30 in the morning, it just took off today. Probably got stopped out of break even if you were in this trade, and again, that's fine. I'm getting a free trade of it. You can see we kind of based in it again. Right now, giving us a top and bottom, I think, again, marking this off, and I don't love this top. I think there's our top, our bottom. Our bottom, it's going to be hard to draw it off of. There's no like clear defined zone there. I don't really love any of the zones until much, much lower. I would say that this is probably our top and bottom right now for this one. And again, that black line, just so you guys know, is 125. Well, not charted interval. What was I going to do? Text. 1.2500. Change this one black. Make this 24, and we're going to bold that bad boy. Oops, not one. Figures. 125. So there is an area right below, kind of hiding right below that 125 mark, but 125 is a large psychological level. You definitely have to watch out for that one. Reason being is because it's a quarter, on the quarter aspect of things, the entire like quarters theory. Right now for dollar CAD, CAD has some data this week. I think this one also continues to rise up. Obviously, depending on what oil is doing. Right now, oil is down, so we're seeing CAD weakness. with the API tonight and the oil inventory tomorrow, if we see that surge in oil, if oil can get back up to 120, 105, I think this one also comes back down again. And potential areas, if you drew, not that this is the best of drawing, but if we draw here to here, you can see that 61.8 is a level of basing. So that may be a potential area. And again, this one kind of fibs kind of confirm this one more than anything else. I don't know what it looks like when it approaches down there, but the zone is rather small. You're talking about 11 pips, which is like nothing. And again, it's right at that 80 mark, right? 125.80. Don't know what it looks like on the way down, but it doesn't need to move very far to be, again, it's about a 33, 35 pip mover, which is definitely fine for an intraday based trade. I mean, chart wise, that's how far it needs to move. So it's not even that much, guys. When we get there. So, and again, that's using the 61.80 as a confirmation off of a buying area of demand. Okay. Dollar Swiss. So dollar Swiss, look at this. We had our 1, we had our 2, we had our 3. Number 4 is what broke. We went up, we crashed in, kind of tried it again, came in and based, and then boom, we finally obliterated it, and then went all the way back down to grab the same people. So it finally broke through these zones. Again, it had to fight and fight and fight, and it did it. Again, that's what these zones are for, to show us kind of rails, and eventually the rails will break. Now, dollar Swiss is high right now. We do have the Swiss comments for today. Whoops, hold on, let me bring these all back again. All boom and boom. And again, chairman starts speaking. Again, IMF not going to be necessarily directly related to Switzerland, but maybe. Swiss inflation expectation well anchored. The biggest impact on Swiss price from energy prices and supply chain problems. Yeah, which makes sense. I mean, honestly, I think anybody could say this. Any country in the world right now, the biggest impact on their supply, it's going to be supply chain and energy, right? Generalized statement. A substantial amount of inflation today may be temporary. We know how that transitory inflation thing worked out, so I'm not sure why he's going that route, but it is what it is. Again, everything he's saying so far is like, nah, it's all good. We're not raising interest rates. We don't need to do it, right? I would say that's probably more of a, we're going to continue to see this one move. Let's see on a 4-hour basis. Let's see if we have anything decent on this level. Not really. Nothing that I see in here that I'm like, that's great. Got to trade that one. Not really like that. I mean, obviously there's a basing level right above where we are, starting at 95.11. I don't love much. I mean, you maybe wonder why this is pink and then blue and then green. When we get back in the pink area on a larger time frame, we're back in kind of the higher end of the curve. We're looking for more selling. I think the hard part of selling this one is the normal factors that help drive the Swiss have been removed from the equation. Now they are just kind of lumped in with the euro and what's happening in the European Union. Remember, Switzerland did put sanctions against Russia, so they are considered, an enemy of the state. So if they decide that if they are purchasing gas from Russia, Russia can also cut them off. So they have the same exposure. They don't have the pure neutrality play right now. So this one, same thing. Although we're in this area, or we're approaching this area, I think that you got to stay long the dollar Swiss right now. Again, just talk of U.S. How much we're going to raise, how much we're going to raise, how much we're going to raise. Look for buying opportunities to be able to get in here on these pushes. And again, even oops, I didn't want to do that. Even fib wise, I think drawing this one is again, it just continue to extend. So. Yeah, I'd look for a pullback. And like I said, he's talking right now. He's only saying kind of very weak comments. So I'd look for this to go higher. And I don't really even have a level above it that I'd be like short. I think it's a shame it's not Monday, because if this was Monday, I would say that, hey, listen, this is probably, or even Sunday night, it's probably a good week long target somewhere up here in the 95.50-ish range. Dollar yen, continuing to move, right? We keep drawing this, we keep moving it forward. It's not even an area yet. I don't think it's done. Right now, where are we? 130 pips. So we had the Aussie, which was about 85, right? The Aussie yen. The Euro yen was about 90, right? The pound yen was about 200, a day and a half ATR. And the dollar yen is 132 before we hit that 130 magic number. Daily ATR on this one is 111. And how far did I say it was? So a little bit less than 1.5 times. So all kind of in the same wheelhouse. And like I said, 130 is the magical number where the Bank of Japan said, hey, if it gets up to 130, that's when it actually becomes a problem. But all we would need to do to control it is to raise the interest rate. And raising the interest rate with big strength because they'd be trying to strengthen the dollar. This is not a we're combating inflation. This is we need to strengthen the yen. That means this pair goes down. So they're telling you where that intervention is potentially coming in. So again, it's a shame it's Sunday. This is one of those scenarios where you can try like a week-long trade, like a week-long call spread or binary, because this is when you're looking for it when we get close to one of these, ceilings. And it's well within striking range. And again, we know that this is not just a made-up number, right? That says, hey, we just did it because, right? It's a number at 130. It actually starts hurting the economy. That's when it becomes a problem. And they've already told you what the remedy is going to be. And it's not trying to, it's not trying to stomp inflation down. It's trying to strengthen their currency from that point because it's too weak. So could be a good opportunity. Again, once we get within that range, I think, again, if you're going to set an alert, I think you probably go really anywhere in here. Really probably 50 pips up, 50 pips down around that 130 level is where the Bank of Japan could intervene in this and send this flying back to the downside. So if we get close, again, maybe take something like a week-long position in a binary for something that's cheap. It's a little bit of a gamble, sure, but we do know that if it's an if this then that type of strategy with the Bank of Japan. Commodities. So oil's in the red. It's down 0.5%. There was a little bit of a high put in late yesterday afternoon, and then kind of drove down, and then started to move back up again just a little bit, right? And we're kind of standing where we are right now, right? Actually, oil looks like it's not connected right now. Why is oil not connected? Not sure why oil is not connected, but oil does not look like it's connected right now because the last date on this one is giving me the 13th when we're over here, obviously. Anyway, oil is one of those ones you want to watch out for. I think it's odd that one disconnected. I don't know. No real-time data. The vendor is on an issue. So unfortunately, I'm going to skip this one right now because I don't have any data on it. Oh, well, I'll have to pull from something else. Natural gas, obviously taking it on the chops today. All right, so natural gas. All right, so natural gas, unfortunately, all right, what makes natural gas interesting is we did touch 8. Okay, we broke through the 8 barrier. We almost made it to $8.10. It is now pulling back again. In my opinion right now, I just don't feel that shorting. Actually, oil is at 108. So oil is down a little bit, but we're the 108. So we're broken through. So yeah, oil's higher in preparation for tomorrow morning. With natural gas, I don't know that it was justified to go above 8. I do think that this is a major concern. I do think that Russia will turn the spigot off. I do think this has the ability to go higher. In looking at this right now, what I would say is this, a buying opportunity? We had a gap. We bounced off the gap, right? We hit here. We bounced higher. So we can remove that now that that gap is gone. In the grand kind of rising of this one here, let's go up to, I think a 4-hour works on this one. Yeah, not really. You can see how far down it is. Do it this way. Okay. There's only one fib drawn on here right now. If I take the 30 minutes, you guys can see exactly what we're bouncing off of. Okay. So for anybody out there that is a fib trader and they're looking for using Fibonacci as a continuation, and again, this is a level. I don't personally like this level, and here's why. I'm on a 30-minute. We've already had a level here. We've touched it once. We've touched it twice. We've touched it 3 times and kind of pushed through a little bit. Don't love that. It is backstopped by a little bit, but our typical situation here would be a Harry Potter trade short. Okay. We'd be looking to take this short when we get a confirmation entry. Basically meaning we drop, we basically pull back, and then we get, we pull the trigger to go short. So there's what our 1 to 3 looks like on a Harry Potter, right? In this case, though, on larger time frame, by larger time frame, I mean on the 4-hour, what banks and institutions are looking at, natural gas is down 10% today. It's an absolutely huge move. Retail traders are looking at this and saying, that's it, natural gas is trading, it's time to get short. Technical traders are going to look at this, and again, the 23.6 is an extremely common fib number. We've had a huge rally in price. We've now had a pullback to the 23.6, which is also a level that people tend to go long from. Okay, So for me, the way that I'm looking at this, and it's kind of more like on like a 2-hour basis, where it's a parabolic move down into an area of buyers, kind of confirm with a 23.6 of Fibonacci. For me, this looks like it's a buying opportunity to get long again. Do I know when Russia's going to turn it off? Do I know when they're going to make comments? No, I have no idea. But purely on a technical based level, again, large time frame, it's a 23.6 pullback. On the lower time frame, it is an area of buyers. It's having issues with it right now. Is there catalyst to drive it higher? Not really, right? Not really, besides the IMF saying, hey, you know what, it's going to be horrible. It's going to be bad if gas gets cut off, or we ban natural gas. It's going to hurt the EU really, really bad. And that's what shot this down, is everybody and their brother trying to go long this trade, getting stopped out on the downside. Okay. Gold. Okay. Gold, we knew we had a level here. Let me drop it back down again. This was an easy short. Second week in a row, I've been talking about how, listen, we need to figure out how to get short gold. Why? Again, crushing inflation means raising interest rates, means setting the value of gold down. Here is a level. Again, we talked about this level. It was an old one. It was a bottom here, bottom here, bottom here. Then it suddenly became a top, came back down, based. It was a top, and then was a top, and then here's 830. The IMF made their comments, and boom, straight down. So oil, gold is down big, 1.08%. Silver obviously going twice as much. It's a little bit late to get into the silver trade right now. There are buyers down here that help stabilizing this one. Is it time to take a huge bullish position, like natural gas? It's kind of is feeling more like a bullish opportunity. Gold, not so much. Okay. Any way to get short in my eyes is kind of, right now with gold is what we should be doing. You can see that an old level that we had down here, this 1962 level, it was an area where buyers had stepped in here, right? Here, whoops, here, and here. So there's your three. Actually, there's your third hit, and it popped up and went through. I would say look for a continuation to the downside. If I was going to form a base on this one, probably around in that level, which again, 23.6 pullback. Let me delete this line. It's a 23.6 pullback to the downside. Again, you can go back to 100% extension or even a little bit farther. That level's coming in right around 1962 for gold. Again, I like any short gold trades. And silver's kind of the same thing. Parabolic move. It kind of did a bit of a turn here. It reversed at 10 o'clock, 11 o'clock today, so right around that reversal time. I don't really have strong buyers down here until 24.85. I would do the same thing. Run fibs on this one if you're looking for an entry. You can see right now that we are also in silver. Make it top and bottom. We're also getting very, very close to a 23.6. So anybody that wants to continue this trend and stay with it, they're waiting for a 23%, 23.6% pullback, and they're looking for a push down. And I think overall, 24.85 is really kind of where our target is for the downside for silver. So gold and silver are in interesting spots right now. But yeah, so decent movement, like I said. Unfortunately, I can't do the oil assessment. Oil is kind of stuck right now. I'm not sure, why that the vendor's on an issue, whatever that means. But I can't tell you based off of live pricing. I can tell you right now that 108.27 is where gold is, or crude oil is. It is down 4% today, right? But crude oil is still at 108. I wish I could see a chart on that one, but it won't let me pull the chart. So, but yeah, so as I said, there's a lot going on, but there's also not a lot going on. Again, globally on a currency spectrum, absolutely zero. Look at this. The pound dollar is at 0, 3, 19, 28, 24. We just talked about how these have 100 pip ATR, and we're doing 25% of it. This is doing 0% of it right now. The yen is the major mover in the markets, but this is so much yen movement. We do know that the hot button for the yen is that 130 figure. And just to close out today on that, again, we were sitting up here at 128.75. 128.75, and we know a standard daily ATR right now on this one is 110. So we are within one daily ATR of hitting that magic number of 130 when the BOJ says we're going to have to intervene when we get to that level or close. Now it's not like it hits 130 and immediately goes in, but you should be looking for low risk opportunities to take this one short, particularly when we get one more green day on the market. So with that said, mark your calendars off for April 26th. Again, same time next week. Don't forget, we do have the morning show every week. If you guys want to join us for that one, it's 8:45 to 9 a.m. go over to YouTube, search Nadex, find the channel, hit like, or I guess subscribe, and then hit the bell notification icon. Whenever we go live, you will get a notification from us, and it's 8:45 to 9 every morning. If you have any questions today, support@keeptradingsimple.com. All you got to do is email me with anything I said, or if you didn't understand something I said, be more than willing to answer it for you. And again, I hope I'll catch you guys next week. So with that said, I'm out of here. I'll catch you later. Thank you for joining today.